Hello everyone, I'm Zara Fatima. Welcome to my channel. Today in this video, I'm going to explain you the subject financial management. The subject financial management is having by the students of Usmania University, BBA students, MBA and MCOM students. Even CA students also having a subject financial management. So this video is helpful for all. Students, this is my third lecture on the subject financial management. In my last two lectures, I explained you about financial management, its meaning, nature and scope, functions and approaches to financial management. Now in this video, I'm going to explain you the objectives and financial goals of financial management, under that profit maximization objective and wealth maximization objective, and one more topic, that is risk return trade off. So these topics I'm going to explain you in detail in this video. So students, watch the video with full concentration and don't skip the video. If you skip the video, you will not understand the concepts. Students, in my last two lectures I explained you about financial management, its meaning, nature and scope, functions and approaches. So what is the meaning of financial management? Financial management is a human activity which is concerned with planning, raising and controlling of the firm's financial resources. So students, why we are planning, controlling and raising of the firm's financial resources? Because to achieve the objectives of the business. So what are the objectives, what are the goals of business? The first one is profit maximization and the second one is wealth maximization. So profit maximization and wealth maximization, these two are the most important objectives of the business in the present scenario. So students, profit maximization. What is profit maximization objective? Students, profit maximization objective is a traditional objective, or we can say it is a old objective, or it's a narrow objective of the business. Now even it is a financial management objective also, because earning profit or maximizing the profit is the essential part of the business organization for its growth and expansion, because profit is necessary for growth and expansion of every business organization. Clear students? Profit maximization objective is a traditional objective, it's an old approach, it's a narrow approach. Now on screen, profit maximization, it simply means maximizing the rupee income of the firm. Profit maximization, it is simply means maximizing the rupee income of the firm. According to this approach, actions that can increase profit should be undertaken, and those that decrease profit are to be avoided. So students, according to this approach, they concerned only with maximizing the rupee income of the firm. Maximizing the rupee income of the firm means maximizing the earning per share, EPS, earning per share. They consider only maximizing the rupee income per share. Whatever activity which increase the profits, that is undertaken without considering the risk attached with that activity. This is the objective of profit maximization. Now earning profit is a main aim of every economic activity. A business, being an economic institution, must earn profit to cover its cost and provide funds for growth. No business can survive without earning profit. Profit is a measure of efficiency of a business. So students, this profit maximization approach, they consider only the owners of the business as a prime, first and last importance. They ignore the other parties who have stake in the business, like employees, suppliers, bankers and government, because they also have stake in the business. We cannot ignore them, because business has some social obligations, business has ethics towards the society, towards employee, towards customers, towards suppliers, towards bankers and government also. So business has to satisfy them also to run the business in the long way. But this profit maximization approach ignores the other stakeholders. They consider only the business owners as a prime importance. So this objective have some limitation. What are the limitations? Profit maximization has some limitations. The first limitation, the first drawback is it is vague or ambiguous. That means whatever profit earns by the business, it's clearly not shows the profit is short term profit or it is a long term profit, or whether the profit is profit before tax or profit after tax, or whether it is a operating profit or profit available to shareholders. So this is the first drawback, first limitation of this profit maximization approach. Now the second drawback is it does not consider the time value of money. So students, another drawback is it does not consider the time value of money, because today's value of money is more than the future value of money, because future value of money will be lower with the present value, because future is uncertain. So they does not consider the time value of money in this concept. They ignore that. They only consider the returns. They does not consider the timing. Now the last drawback is it ignores risk. Students, the third limitation is it ignore the risk, because they consider only the returns. They did not consider the risk, because whatever activity they undertaken that attach with the risk, every return is attached with the risk. They consider only the returns and they ignore the risk which is automatically attached with the activity which we undertaken. So these are the limitations and drawbacks of profit maximization. So the next objective of financial management is wealth maximization, because profit maximization is suffering from several drawbacks. So the next objective is wealth maximization. Wealth maximization means maximizing the net present value or wealth of a course of action. The net present value of a course of action is the difference between the present value of its benefit and the present value of its cost. The fundamental objective of a firm should be maximize the market value of its shares. So students, wealth maximization objective is a modern objective, is a new objective, or we can say it is a broader objective. Now it is accepted throughout the world. Maximization of wealth we have to consider. So maximization of wealth, whose wealth we have to maximize? We have to maximize the wealth of the owners. How the wealth of the owners will be maximized? By increasing the market price of the shares. How the market price of the share will be increased? The question will arise, how the market price of the share will increase? So market price of the share will increase if the company earns more profits. If the company earns more profit, if the company satisfying all the obligations towards the society, towards employees, towards suppliers, towards customers, bankers and governments, then only the company can earn more profits. Ultimately, then the company automatically runs in a long way. So the main objective of the company should be maximize the shareholders' wealth. Maximizing the shareholders' wealth will be possible only when the market price of the share will increase. So this is the wealth maximization. Market price of the share will increase is important, because due to globalization, due to increase in the size of business organization, changes in the technology, innovation. So the financial management objective should be maximize the market value of the shares. So these are the wealth maximization. So market value of the share increase shows that the financial manager has taken right decisions, because the company is growing, the company is earning more profits. Because of that, the value of share will increase. So this is wealth maximization concept. Now the next concept is risk return trade off. A financial manager has to take various types of decisions from time to time, like investment decision, financing decision, dividend decision. These decisions are interrelated and jointly affect the market value of its shares by influencing return and risk of the firm. So students, this is the next topic, risk return trade off. The relationship between return and risk can be expressed as follows. Return is equal to risk free rate plus risk premium. What is risk variability of expected returns? Students, risk means variability of expected return. Risk free rate is a compensation for time. Risk premium is equal to compensation for risk. So students, every financial decision, whether it is an investment decision, whether it is a financing decision or dividend decision, it is directly interrelated with each other. So it is interrelated with risk and as well as returns. Automatically the risk is attached with the returns. Higher the risk, higher will be the returns. Lower the risk, lower will be the returns. So we cannot eliminate the risk. We cannot avoid the risk, but we can manage the risk. So here, higher the risk of an action, higher will be the required return on that action. A proper balance between the return and risk should be maintained to maximize the market value of the firm share. Such a balance is called risk return trade off. What is risk return trade off? A balance between risk and return should be maintained to maximize the market value of the firm and to minimize the risk. That balance is called trade off. So every financial decision involves a trade off. A financial manager should seek course of action that minimize the risk and maximize the return. So students, every financial decision, whether it is a investment decision, financing decision, dividend decisions, it is directly interrelated with risk and return automatically. So every decision involves risk and return. So higher will be the risk, higher will be the return. Lower the risk, lower will be the return. So we cannot eliminate the risk. We can manage the risk by applying different techniques. So every financial decision involves the risk. The manager has to select the best course of action so that the risk will be minimized and return will be maximized. This will be the objective of the financial manager. So this is the criteria for risk return trade off. So students, I hope all of you understand now the objectives and goals of financial management, that is profit maximization and wealth maximization, and another topic, risk return trade off. So in this video I explained you profit objectives of financial management and risk return trade off. So students, like and share this video with all your friends, and if you are new to my channel, please subscribe the channel so that my future notifications related to my future videos will come to you directly. So students, in this video I complete the unit 1 of the subject financial management. In my next video I will explain you the unit 2 of financial management. Unit 2 is a problematic part. So students, inform your friends about the channel, about the videos, and about the upcoming videos also, and share this video in your friends WhatsApp group so that it helps to you and your friends for the preparation of your upcoming examination. So students, thanks for watching the video. Stay connected with us.